What is going on, investors? Hopefully you guys had a great week out there. That's right, it's Friday, and that means it is time for our FAANG stock recap show, plus Microsoft and Tesla. A bunch of news this week, and then we'll get over to the stock charts as well. If you want to follow me on Instagram and Twitter, I'm going to include links to that in the description below. I don't got a lot of follows over there, so I'd appreciate you if you check me out over there. Let's kick things off with Facebook. Started the week at $266 per share, melted up kind of nicely up to $270 per share. Facebook is building an audio chat product to rival Clubhouse. So Clubhouse is this audio, it's like an invitational only app, and it mimics like chat lines. So if you're a little older than me, you might remember like the chat lines of the 80s where you kind of got on the phone and you kind of had a group chats basically via, I think like Zoom, but just with audio. And so this Clubhouse app is gaining some popularity. It's still kind of a niche product, but it's gaining some popularity. And what does Facebook do best? They just copy everybody else's ideas. And so Mark Zuckerberg has basically given the green light for developers of Facebook to kind of create a similar product. They've done that with Instagram stories and Instagram reels and a bunch of other things that they've developed over the years. How big of a hit this will be, who knows? But when Facebook gets into the game, it tends to be pretty good. Now, that was it for Facebook. Not a ton of news. Moving on to Apple, some more news with Apple. Started the week at 135.34. Finished the week at 135.42. So basically dead flat for Apple. When we get over the stock chart, you'll see evidence of that. Now, the week sales continue for Apple's iPhone 12 mini. So this is the smallest version, and I believe also the cheapest version of the phone that they just came out with, a couple months ago. And I think there's some reasons for this. Number one, most of us have gotten comfortable with the larger size phone. But I think the other thing is there's all these payment plans with this phone, whether you have the Apple card that allows you to have no interest for 12 months or whatever it is, or you can get a payment plan through AT&T and Verizon and these carriers to where, do I really need an affordable phone when I can just pay off the other one in incremental payments? I think both of those trends could be hurting that phone. Now, analysts are suggesting when we get to Tesla, the big news with Tesla and Bitcoin, to preview that, analysts are saying Apple should buy Bitcoin and launch a crypto exchange, says an RBC analyst. So a couple things here. So Tesla, as we get into here in a minute with their news, is they invested, I think, about $1.5 billion into the cryptocurrency instead of holding cash, basically earning almost 0%, that they bought some Bitcoin, which earns, north of 100% kind of year over year when you look at the performance of Bitcoin. So it'll be interesting if these large corporates like Apple, a Tesla, Microsoft, Google, whoever it might be, if they start converting their cash that's sitting there on balance sheets into Bitcoin, certainly will be interesting to see. Now, this RBC analyst says they should take it one step further and create maybe like a Coinbase-esque kind of crypto exchange or something like that, or a wallet. We'll see if Apple is capable of that. I think the leadership of Apple is a little old school. Tim Cook is a little kind of buttoned up and a little old school. The odds, I think, of this happening probably slim, but the rumors of it could be good for the stock. We'll see what happens. Apple's former hardware boss is now heading the VR headset team. I think I threw this in here just to show you Apple is serious about this VR headset. Okay, this Dan Riccio, he was with the company for a long time. Looked like he was going to leave the company, but he actually just got promoted within the company to work on this VR headset, which is believed to cost about $3,000, which is close to 3 times the cost of like an Oculus and some other competitors out there. But Apple, it appears, I would guess within the next probably 24 months would probably have a VR headset or something like that on the market. Now, here's an interesting one. Hyundai and Kia are not, I repeat, not in talks with Apple on self-driving electric car. We've talked about this over the last few weeks. There's been some rumors and things like that Hyundai was in talks with Apple to develop an autonomous car. Now, here's the deal. I heard some commentary on this, that this is often the case, that rumors come out with other companies that are partnering with Apple. And then these companies have to come out and say, no, we're not working with Apple, when they could still be working with Apple. Apple likes to do things on their time, on their terms, and in relative secret. They want to keep things a secret. And so Hyundai Motors coming out with a press release saying that they're not working on an autonomous car, it certainly hurt Hyundai stock a little bit, at least on the markets that it trades in. But we'll see what happens here. It wouldn't surprise me if Apple is in talks with these companies, but my guess is they're probably a ways away from executing on anything. Now, moving on to Amazon, start of the week at we'll just call that $3,333. End of the week down just slightly. Had a nice day today, but ended at $3,280. Now, a group of investors say Amazon should not hamper the union effort. So there's about 6,000 employees, warehouse workers in Birmingham, Alabama that want to form a union. And Amazon's just been putting up a big fight for them to start this union because Amazon realizes this is probably going to create collective bargaining. They're probably going to have to pay these people more, add more benefits, work them less, all these types of things. So Amazon is trying to do that, but there's a group of investors with a significant stake in the company that say they should not hamper the union effort, because Amazon feels that if these 6,000 employees in Birmingham, Alabama are successful, guess what? That will probably spread. I think they have like over 500,000 employees, maybe even more than that at this point. So this is a small fraction of the number of employees Amazon has, but if it spreads to a larger percentage, 20, 30, 40, 50% of them, then yes, it could create some increased cost and things like that for Amazon. My argument is always that Amazon will replace these workers with robots one day, and so everybody should be careful with what they wish for there. Amazon plans a 13-inch wall-mounted Echo display. This is kind of an interesting product. I guess this would kind of be like an iPad or something like that, or maybe Facebook has a product out there that might sound a little similar to this. It's for, maybe something where you can control smart home, so like your air conditioner, and maybe you have like a Ring doorbell on there and things like that, but you can also do video chats and maybe stream media like music or maybe even like a YouTube video or something like that on there, or Amazon Prime Video. And so we'll see if this comes out. The pricing tends to be between that $200 and $250 range. Amazon always prices things pretty affordably. We'll see if they end up coming out with something like that. Netflix started the week at $546 per share, ended up about $10. Well, actually interesting, when we get over the Netflix stock chart, it's actually approaching a critical level. That went up about $10 per share. Now, Netflix, Fubo, and Spotify are featured in an all-streaming ETF. It's not an endorsement for this. I don't think it's necessarily begun trading, but SUBZ is a new internet service ETF that has Netflix as part of the holding, Spotify. So if you don't necessarily want to get into Netflix specifically, but you like the streaming business, well, there's a new ETF that appears like it will address those things. Moving on to Google. Start of the week. This can't be right. It's got a 1 year chart of it. I was like, wow, it up $500 in a week. No, we're basically, oh my goodness, we're like dead flat on Google this week. Start of the week at $2,096. End of the week, you guessed it, $2,096. Now it went down as low as $2,062. So you had about a $30 swing there in Google. Now Google's been in, it's had some troubles here. So French publishers, looks like it makes a $76 million deal with French publishers where they'll give some money to publishers. Obviously, they're still in the talks with, I think, the Australian publishers and things like that. But $76 million to Google. We just posted a video about their balance sheet and their operations. $76 million is like a quarter to most of us. So Google getting off like they normally do. What I found is Google often plays hardball in the beginning, and then they settle for an amount of money that is basically like a rounding error for them, or what they make in like 30 minutes of a day. So I actually like their strategy when it comes to negotiation. Now, Microsoft, not going to sit on the sidelines and let Google kind of take all the heat without trying to come in there and look kind of like a white knight. It says Microsoft striking at Google says U.S. should require payments to news publishers. So this relates to that Australian thing where Google is potentially being forced to pay Australian publishers. So when like you search something on Google, maybe you're searching for the news, and then you click over the news tab and you're reading a newspaper article or something like that. Well, Australia is saying they should be paying these publishers, and Google's saying no, they're giving this content out for free. We're just kind of aggregating it using our algorithm. Well, Microsoft says, well, not only Australia should do that, but maybe the United States should do that. And so Microsoft is honestly, taking this as an opportunity, I think, to maybe hurt Google a little bit and maybe develop some market share for its Bing product, but we'll see what happens there. My guess is, again, same thing is going to happen. Google's going to play hardball, whether or not U.S. publishers require a payment or not. They'll end up getting off for a very small amount of money. Now, here's an interesting story that came across today. Qualcomm is objecting to NVIDIA's $40 billion ARM purchase. So NVIDIA bought this ARM, which develops a chip. It's like a chip designer, and it's a huge chip designer. They're responsible for a ton of chips that go into cell phones. And it's rumored that both Microsoft and Google are among the companies that are also complaining to antitrust officials about the deals, and at least one of the companies, and we're referring to Google or Microsoft want the deal to be terminated. And obviously Qualcomm wants it to be terminated as well. I know that President Joe Biden was talking this week about the importance of chip manufacturing, probably because he's met with car makers and some other, stakeholders in this industry. And so we'll see what happens. There's going to be an arms race, so to speak, not only this ARM company that NVIDIA has agreed to acquire, but I think in general in the chip space. Now, moving on to Microsoft, we've actually talked a lot about Microsoft already, but $242 is where Microsoft started the week, ended up just fractionally up to about $245. Now, here's an interesting one. Microsoft approached Pinterest about a takeover in the recent months. So we've talked about this when we've done our Microsoft videos. Microsoft has just a whopping amount of cash on their balance sheet. Now, obviously, they tried to buy TikTok. That didn't work out. They've tried some other, maybe smaller acquisitions. Those haven't worked out. Now, there's probably a lot of deals Microsoft would like to do, but because of antitrust regulations and government stuff, they probably can't pull that off. But they talked about trying to get Pinterest. Now, Pinterest wants to remain independent. I think the founder still is either the CEO or one of the executives still in charge. So I think it's going to be a little difficult, but it just shows you Microsoft is looking to make a big deal. TikTok would have been a big deal. Pinterest probably would have been even a bigger deal. And so I would expect over the next 12 months them to, again, I wholly expect them in the next 12 months to try to make a deal. Whether or not they pull it off will be the other story, but this was an interesting one. Now, Volkswagen is teaming up with Microsoft on an automated driving solution. This is how it appears Microsoft is going to get into the autonomous vehicle. And I would argue that maybe Apple gets into the game in a similar fashion by just collaborating with a car brand like Volkswagen or Hyundai or whoever it is, and then, offering the big computing expertise that they have. And so and Microsoft's going to do that with its Azure platform and help companies like Volkswagen develop an autonomous driving platform. Microsoft will kind of be like the backbone of it. They won't be like a Tesla that's kind of out in front with its own car brand, or maybe even like an Apple, but they'll be a big piece underneath the surface, and that could bring a lot of profits into Microsoft. Now, Tesla started the week at 871. This one has slid down the train track a little bit, down to about $816 per share. Interesting when we get over the stock chart with Tesla. Now, Tesla, NIO, Li Auto, any car manufacturer out there, GM, Ford to be specific as well, may be hit by a battery cell shortage. Now, Elon Musk has talked about this extensively on the Tesla conference calls. Ford, GM, all these guys have talked about this, that they're going to run up with a battery shortage at some point if manufacturing and that kind of exploration doesn't keep growing. And we've obviously saw this as well with a chip shortage with cars, with Ford and GM having to reduce their capabilities of manufacturing cars over the last few weeks. All these companies might create, this could put a lid on Tesla's ability, NIO's abilities, Li Auto's abilities, and all these other electric vehicle makers to really push forward sales. And so maybe that is why Elon Musk and Tesla are Bitcoin investors. Elon Musk revealed this week that they purchased $1.5 billion of Bitcoin. That is right. Tesla now owns Bitcoin. And last time I checked the Bitcoin chart, it is going up. So it'll be interesting when we jump into the financials of Tesla in a couple months when they do their next quarter, how they break that out. Like, because I would guess that this $1.5 billion worth of Bitcoin is probably going to be worth more, and it could be worth significantly more than $1.5 billion. So it'll be interesting how they show that to investors and what that does to the stock. I tell you what, if you follow this channel and watch my Tesla videos, they make about a 20% blended margin selling a car. Last time I checked, Bitcoin goes up like 20% sometimes in a day. And so it'll be really interesting to see, not only is this significant for Tesla and Bitcoin, but obviously for other corporates out there, will they follow Elon Musk's lead and put a portion of we already seen it with other smaller companies out there as well. But, obviously Tesla is one of the biggest and most well-covered, maybe the most well-covered stock in the stock market, maybe outside of like an Apple. And so we'll see if this creates like a domino effect of more corporates going this way. Now, Tesla says sales in China account for more than a fifth of total revenue. And I think this is interesting because you have a lot of competition in China with Li Auto, NIO, and there's XPeng and a couple other ones in there. And so, if this creates downward pressure, so if Li Auto and NIO and all these companies, they create downward pressure on the prices for Tesla cars, because it's a fifth of total revenue, my guess is that's probably going to grow over the years. Well, it could create a little bit of margin compression. But then again, if you're investing your cash into Bitcoin and it keeps going up, might not be a big deal. Now, Tesla seems passing on firing off a huge M&A deal. So we talked about this over the last couple of weeks on the show, where there's been some rumors. Maybe Tesla buys a Ford. I think even Elon Musk kind of floated this rumor that maybe they buy. I don't think he mentioned anyone specific, but we've said, well, what if they buy like Mercedes or something, or Audi or BMW or Ford or GM? It would be an interesting combination with Tesla's batteries, putting them into the branding and the distribution and the servicing of some of these other car brands that are far more built out. Some of them over maybe even 100 years. Doesn't appear that people are predicting that. So this is probably not priced in the stock. So if it does happen, could create some interesting levels for the stock. Now let's kick things off on the stock chart. Moving over to Facebook. Facebook stuck right here in the middle. Really interesting spot. So $270. It's teetering right here. Didn't do a whole lot. Melted up just slightly this week. For me, Facebook is, if this level up here at $285 per share has just proven to be a pretty hard level. And this goes back to October of September of last year. 285 has just been a hard stop for Facebook. Anytime it's approached that level and even breached it a little bit, the stock is sold off. We're in a level now, 260 to 270, 275. It's not a bad level, but again, we're $10 away from kind of a hard resistance level on this one. Down lower at 245 is still my spot. I already own, 30 shares of Facebook, maybe a little more than that, maybe less. That's where I would want to step in with Facebook. Apple, kind of another hard level for Apple. Okay, we'll call this $138 per share. Is a hard level for Apple. We see after earnings, we popped up, and in fact, we popped all the way up to 145, but it got rejected. And then once we broke below 138, it was pretty much down to 130. We peaked back up to 138, and sellers just step in when Apple's at 138, and they did it all. They've done it for like almost 2 weeks now. And so lower here, 129 to me, right in that 129, you call it even 130 if you want to. Right in that range, if we get a pullback into Apple, that'd be the first place I'd want to step in. Lower than that, you have 125. Way lower than that, you got 119, 120. Whether or not we get that opportunity, we'll see. But in the intermediate term, this 138 has really been kind of like a lid on Apple stock. Now, moving over to Facebook, tell you what, Amazon. The reason why I said Facebook is I look at Amazon's chart and I can flick back to Facebook, and they're not identical, but they're pretty darn the same. Okay, Facebook has Amazon, I keep confusing these two. Amazon has been trading sideways since about October. Okay, it's been in a tight range, almost 3,100 to 3,300. Now it's peaked up and below that level for a day or two, but it's been really tight in that range, and that's basically where we're at right now. After earnings, Amazon's stock broke above 3,300. We tested the 3,425 level, and sellers stepped in, and they stepped in all week, actually driving this down to about our 50-day moving average. And so not necessarily an area, since I'm already overweight Amazon, my opinion on this one's a little bit biased. I wouldn't want to step in on this one until you got about 3,100. If you're not in Amazon, sideways consolidation is not a terrible space to buy stock. Now, is it the best area? Is it the most amazing levels to jump in? No, it's not. But sideways consolidation is not the worst spot. I'd probably rather get in on sideways consolidation than a parabolic move upwards, or in some cases, maybe a parabolic move downwards. Now, moving on to Netflix. This one, unlike Amazon, has been in a steady uptrend really for like almost 2 weeks now. So this stock has just been on a steady uptrend, and it is approaching what I would consider just not necessarily a key level, but it's somewhat a key level here. $565 per share is kind of overhead resistance on Netflix. If it can peak above that, we could potentially retest these. This is about $580. So you got about $10, $15 upside in this one if the momentum continues to roar. Now, if it gets rejected at 565, I think there's some levels underneath here at 540 and 520 where you could potentially want to step in this one. It appears to me that Netflix wants to consolidate between the 520 and 565 level. So anywhere in there, if you want to get it, that's cool. Netflix tends to pop way above those levels. And so I wouldn't get it on the pop up. I would get it in these consolidation boxes that we have down here. Moving on to Google. This one's Google's just gone crazy. Okay. Google traded sideways for the longest time. A fair amount of time last year. Didn't quite have the gains that the Apple and the Amazons and the Facebooks and even the Netflix had, and certainly Tesla over the last year, but Google is really making up for it over the last few weeks. Now it's consolidating up here in the 2075 range. Not necessarily a spot I'd be dying to get into this. You have this big gap in price here. If we see a pullback to 1919, that could potentially be an area where I'd want to get that. But again, that's like $100 where more than $100 where the stock is today. Whether or not you get that opportunity, I'm not sure. When stocks make these big moves, if you're a fan of the channel, I tend to just kind of watch them, especially considering I already own some of this stock. Moving on to Microsoft, this one is this is just beautiful. My goodness. We've been in an uptrend over this is really the last month or so. We started at about 213, bottomed out about January 15th or so in 213 per share. And it has just been a steady churn up, and now we're up at $245 per share. I have kind of like 240, 240, 245. If you want to get it in this elevated range, could be a spot. But if we break 240, let's say Microsoft sells off next week a little bit down to 240, I think there's a spot down here at 232 and below that at 230, somewhere in that 230 range. If you get a pullback, you should see some level of buyer step in at that point. That's personally where I'd want to step in with Microsoft. Now, moving on to Tesla. This one, man, I get questions on my channel. I get questions from friends and family that know I tend to follow the stock market as well. And so Tesla, everybody's like, hey, it stopped going up, and they're almost like concerned. And I'm like, this is actually really good. Okay. When you get sideways consolidation in Tesla, it's not a bad thing. Okay. The thing you want to try to avoid is buying it at these elevated levels, and then it has this kind of parabolic move down, which it has done in the past. So sideways consolidation, not a bad thing. If you're trading Tesla, stop loss at 775. Okay. Doesn't have to be on the dot. You come in here and do your own analysis. But personally, if you're trading Tesla, 775. You break 775, on Tesla, and down it goes. Okay, it's probably, in my opinion, has a higher probability of retesting kind of the 650 range. That's quite a drop, okay, whether you're trading options or you're trading the stock as well. Now, if you want to jump in on Tesla, anywhere between $775 up to about $815, which is where the stock is right now, is not a bad place to buy this if you think this sideways consolidation, like we've seen down here, will result in upward trend. Same thing. We consolidate. This is not really sideways consolidation, but we consolidate a little bit and then boom, up to the trend. Okay, what you're looking for with Tesla is a break above $890 per share. A break above $890 with momentum could get this stock honestly up to $1,000 per share, at least maybe $920, $930, $950, somewhere in that range. Again, it has to break that with momentum because we've actually kind of peaked above this $890 level and it gets rejected. I certainly wouldn't necessarily want to be a buyer up here at $890 because that has proven 1, 2, even close to 3 times just over the last few weeks. This is where sellers step in and the stock sells off. But you can play stocks in a sideways momentum. 775 up to about 8, right where the stock is today. I tell you what, if Tesla open, I've got too many FAANG stocks on my mind. If Tesla opens at 815, 816 on Monday, this could be, or on Tuesday, I think we've got a holiday on Monday. If it opens at right here at this level, that could be a potential trade for me because I'm trading it from 8. I'm going to put a buy in at 815, 816. I'll put a stop loss at 775 and I'm playing it up to about 880. So you've got it's about $65 in upside and about $10 in downside or so, a little more than that, maybe $20 in downside. Not the best trade, but because Tesla is so well followed and traded, might not be the worst trade in my opinion. So that was the FAANG Stock Recap Show. Hopefully you guys have a great week. Again, I have links in the description below to my Twitter and my Instagram. If you guys want to follow me on there, I'd appreciate that. Thanks for tuning in this week. We'll be back again next week. Good luck with your investments.